the tutorial of pivot zones. Now that you know what P1 and P2 are, we're going to dive into these. They are quite easy to grasp, easier. One of the more easier, but also one of the more powerful concepts in the dashboard at the time of this recording. So makes sense to begin with this one. And I mean, that's at the time of recording. Who knows, by the time you're watching this, there might be something else that comes ahead of this. But in any case, let's dive into pivot zones. And first, I want to talk about what they are. So what are pivot zones? Well, you can maybe already guess it. We have talked about the concept of P1 and P2, the first pivot and the second pivot. And also the pivot zones are divided into two parts. You can already guess it. It is P1 zones and P2 zones. So what are they? The P1 zones indicate the price action, the price area in which more or less 80% of P1s are put in. And then it also comes to show that P2 zones indicate the price area in which more or less 80% of P2s are put in. So this is a price zone for a certain time frame. So say we have a daily time frame, then the P1 zone indicates a price area in which more or less 80% of P1s will be put in. And we'll dive into some examples in the chart in a bit, so then the concept will become more clear. But stick with me for now. Before you ask, these are calculated obviously based on historical price action. So what's in a very simple sense is being done is just looking at where in the past are P1s and P2 being put in relative to the daily open, weekly open, session open, 4-hour open, hourly open, and so on. And then it extrapolates it to the current day. So that's pretty much what it's doing. So in other words, you have, unless price action changes significantly from the historical date range you're looking at, there's more or less an 80% chance, out and about, chance of putting in P1 within the P1 zone and P2 within the P2 zone. So that's the thing. Before we dive into an example, I just want to say, okay, why pivot zones? And we're going to dive into this more later on in the next video. But I want to briefly mention it so you already have some idea in the back of your mind. And that is, first of all, it helps in determining important point of interest. And specifically, it helps in increasing your confidence whether something is a very important point of interest for the day, week, and so on. Get into that more later. They help in determining take profit targets. They help in determining invalidations. And they act as support resistance levels, which is actually something I did not expect when I made them. But as you will see later in a later video, it happens quite a lot. So let's dive into the chart right now with an example. So say we have the daily open right here on the vertical. So in terms of time, the daily open is here and the daily close is right here. Then what we have here is horizontal, so the daily open. So the price at which, this is the time at which price opened, the vertical, and this is the price where price opened, the price level. And what we see here is the P1 zone. So if I just take out the P2 zone for now and keep things simple, say this is the P1 zone. We see there is, in this area, unless price changes drastically from the historical behavior, there is more or less an 80% chance of putting in P1 within this area right here. And we can see, and I point this out, so there's more or less within daily open, and in this case, 2.14% above daily open, there is an 80% chance to put in the first pivot there, and negative 1.99%. These are just arbitrary numbers. I just made them up. The reason I did that is that I want to show you that the zone's different at the top from the bottom. The reason is because of, for maximum accuracy, the top zones, so the things above daily open, are calculated separately from the bottom zones. Why is that? Well, because we have bullish days and bearish days. We know that if we have a bullish day, P1 is put in below the daily open. If we have a bearish day, P1 is put in above the daily open. Let's give that a bigger example or better example. So we have the bullish PA example right here. If we have bullish PA, that means that the daily P1 is the daily low, which means that it's usually almost always put in below the daily open. It's either at the daily open, so 0.00% from the daily open, or below it, right? So that means that if we have a bullish day, there's more or less an 80% chance of putting in P1 right here, given that the price action remains more or less the same. If we have a bearish day, then it's the opposite. Then we have an 80% chance of putting in the P1 above the daily open and in this zone right here. So that is the difference. So if you put them both up, right, they're basically, it's drawn as one big zone, but you basically have to see them as two separate zones, where one above the daily open is for when the daily P1 is the daily high, and below the daily open for when the daily P1 is the daily low. And then naturally you can see, so if you have a point of interest right here, we'll get in that later, then this is more or less, if you put in a pivot here and you go up, then this is the area in which you most often do this. What you see is that if price goes here, then usually that is reserved for trending days. So very trending days. So say you have a bearish day, then you could do something like this. Because the first 80% of pivots are very concentrated. They're very usually close to daily open. And then the other, so this is 80% of daily lows, you have to see that, are put in here, right? And then the other 20% are put in more or less here, right? So that area is much bigger. And those are usually, you have some wicks here, but usually these are just reserved for very trending days, which makes sense because common knowledge dictates that trending days are more or less 20% and ranging days are more or less 80%, right? So that makes sense. So this is in a very simplest essence what pivot zones are. And we can do the same for the P2 zone, right? Where you have the P2 zone right here. That means that 80% of P2s are put in within here or within here. Because the same thing goes that if you have a bullish day, then you have P1 here, and then you have P2 somewhere within here. Could also be somewhere here, by the way. So somewhere within here. And if you have the daily high as P1, so you have a bearish day, then you're looking for P2 to be put in somewhere within this zone right there. Now, we have taken the daily as an example here. The pivot zones are available for weekly, daily, 4-hourly, sessioned, and hourly timeframes. But we'll dig into that more. For now, the basic concept is this, that you have more or less an 80% chance of putting in the first pivot of the day right here, and more or less an 80% chance of putting the second pivot of the day in here if we have a bullish day, and here if there is a bearish day. So that is the simplest essence of what a pivot zone is. So I want to keep this one simple. So this is simply what it is. In the next video, we're going to dive into some examples and how to actually use it. So I'll see you in the next video.